Bernie Madoff was once a reputable financier who once controlled $65 billion in funds. He was also chairman of Nasdaq, which is the world's second largest stock exchange with a $17.36 trillion market cap and $200 billion daily volume. At his peak, Bernie Madoff confessed to his sons that all his success is a lie and that over the decades, high returns are the result of his Ponzi scheme. His sons, Mark Madoff and Andrew Madoff, reported to federal authorities and Bernie Madoff was arrested. He was sentenced to a 150-year prison sentence. Bernie Madoff died in prison in 2021, while his sons had the same fate. Mark Madoff hanged himself within 2 years of his father's arrest, while Andrew Madoff died due to cancer. Bernie Madoff's brother, Peter Madoff, was sentenced to 10 years in prison in 2012. Want to know how Bernie Madoff ran the world's largest Ponzi scheme of $65 billion, which he managed to keep secret until he told his sons? Watch the full video. We at Business Chronicles tell the stories of extraordinary successful people. Please subscribe to our channel to help us in making more videos. Bernie Madoff was born on April 29, 1938 in Queens, New York. His parents were Ralph and Sylvia Madoff. He had 2 siblings, Sandra Weiner and Peter Madoff. His grandparents were immigrants from Poland, Austria, and Romania. Madoff studied at Far Rockaway High School and graduated in 1956. He gained admission into the University of Alabama afterward, joining the Sigma Alpha Mu fraternity. He left the university after 1 year, though, transferring to Hofstra University. He graduated from Hofstra in 1960 with a bachelor's in political science. After graduating, Madoff joined Brooklyn Law School. He, however, never stayed in the school for long, leaving after 1 year. After leaving law school, Madoff picked up temporary jobs working as an irrigation sprinkler and lifeguard. After saving about $5,000, he jumped into the world of finance. Using his savings and a $50,000 loan from his father-in-law, Madoff started Bernard L. Madoff Investment Securities, LLC in 1960. The company was a penny stock broker-dealer and operated as sole proprietorship. Madoff initially started his brokerage as a market maker working through the National Quotation Bureau's pink sheets. His small firm was not a member of the New York Stock Exchange and could not compete for the big clients as his competitors on Wall Street could. So Madoff focused on retail clients, earning a reputation for scrappy market making. If a client wanted to sell 8 fixed income bonds, bigger firms would shun them, but Madoff would welcome them in and even completed the trade. After a while, Madoff got tired of picking the breadcrumbs of the broker-dealer market and decided to use innovation to get ahead. He started experimenting with computer information technology to disseminate his firm's quotes. At the time, not many broker-dealers had electronic trading capabilities. Following a successful trial, Madoff rolled out the computerized technology. Madoff's bet paid off. His deal flow began steadily increasing. He doubled down on technology and even began offering market activity insight to clients, a game changer. Soon, even the big banks were interested in working with his firm. By the 1980s, Madoff had become a top 5 broker-dealer on Wall Street. By the late 1980s, Madoff's firm was earning $100 million annually. The technology he helped develop would later be instrumental in establishing the National Association of Securities Dealers Automated Quotations stock market, popularly known as Nasdaq. He ended up serving as chair of the Nasdaq in 1990, 1991, and 1993. On top of electronic trading technology, Madoff was also an early pioneer of the payment for order flow business model. Through it, Madoff paid brokers fees to execute their clients' orders. He was also among the first people on Wall Street to do it before it became mainstream in the 1990s. Inspired by the success of his market-making firm, Madoff started a wealth management division. It was this division that grew into the world's largest Ponzi scheme. Throughout the 1990s, as the dot-com bubble raged on, Madoff's market-making business prospered. In the 1990s, he was processing 10 to 15% of all orders for the New York Stock Exchange. This went on well into the 2000s. His wealth management business also grew. Besides heading the Nasdaq, Madoff went on to serve on the board of governors of the National Association of Securities Dealers and the board of directors of the Securities Industries Association. These associations with self-regulatory bodies helped prop up his reputation as a professional with integrity. They also endeared him to charities and foundations, many of which trusted him with their endowments. In 2001, Madoff incorporated his firm as a limited liability company. It had operated as a sole proprietorship for 41 years. By 2008, his company was the 6th largest market maker for the stocks in the S&P 500. At one point, he was even the largest market maker for the Nasdaq. On top of that, he had grown his firm from 4 small rooms on Broadway to 3 floors on the Lipstick Building in Manhattan. This success story, however, in Madoff's own words, was a big lie. Madoff built his investment management business by promising investors high returns, such as 10 to 20% annually, regardless of market conditions. He claimed to use a well-known trading strategy called split strike conversion to achieve these returns. Basically, he said he was buying shares at the lowest prices and protecting his positions with a derivative. In this case, an out-of-the-money put option. Therefore, even if he did not sell his trades at a high, he had hedged his downside, minimizing risk of loss. Wall Street bought into the Madoff story. Many private managers and hedge funds invested in his fund. So did charities and private clients. He even featured on leading publications including the Wall Street Journal. Interestingly, despite his success, Madoff maintained an air of mystery, refusing to go into the exact details of how he consistently picked winning positions. He even refused to admit new investors into his fund and encouraged existing investors not to disclose details of the size of their investments to outsiders, believing it would attract scrutiny. He wanted to keep inquisitive eyes at bay because his returns were all falsified. Madoff never used a top-tier trading strategy to achieve his returns. In fact, he never traded at all. Once an investor wired him money, he simply deposited it to his JP Morgan Chase account. Whenever a client wanted to redeem their money, he just withdrew money from the account and sent it to them. As his funds brought in more capital, he used income cash to meet redemptions, paying old investors with money from new investors. For his return records, Madoff would have his assistant Frank DePascali and his team identified the best performing stocks of the S&P 100 every day and use them to make fake brackets of stocks to falsify records. They compiled fake trading statements manually and then fed them into outdated computer systems. One of the first people to blow the lid off the Madoff Ponzi scheme was financial analyst Harry Markopolos. In 1999, he wrote to the U.S. Securities and Exchange Commission, SEC, stating that it was impossible for Madoff to pull off the returns he was claiming as he would need plenty of volume in the Chicago Board Options Exchange to cover his trades. Basically, because of the size of Madoff's fund, for his split strike strategy to work, he needed to buy more put options than actually existed, making his strategy impossible to carry out. The SEC carried out several investigations on Madoff, but none resulted in a charge. It wasn't until the 2008 financial crisis that things fell apart. In 2008, as the market fell following the collapse of the housing market, Madoff faced an onslaught of redemption requests from his investors. On paper, his fund had swollen to about $65 billion in assets. However, he had only received $20 billion in principal investments. The rest was fictitious paper returns. In his bank account, he only had $5.5 billion. By mid-2008, Madoff had received $7 billion worth of redemption requests. By late November, he only had $234 million in his bank account. He tried to access loans from European banks, but the credit market was too tight. He knew he was finished. On December 10, 2008, Madoff confessed to some employees that he had all along been running a Ponzi scheme and had no money to pay off investors seeking redemptions. On December 11, 2008, the FBI arrested Madoff in his home and charged him on one account of securities fraud. He was freed on a $10 million bail. He was later charged with 11 federal felony counts including wire fraud, securities fraud, money laundering, and perjury. On March 12, 2009, Madoff pleaded guilty to the 11 charges. He was 71 years old. On June 29, 2009, Madoff received a 150-year jail sentence. Since then, authorities had recovered hundreds of millions worth of his assets to compensate the victims of his scheme. Madoff gave generously to charities. Through the Madoff Family Foundation, he donated $19 million to nonprofits, hospitals, and theaters. For example, he donated $6 million to support lymphoma research and made additional gifts to the Gift of Life Bone Marrow Foundation. He served on the board of charities like the Picower Foundation, the Robert I. Lappin Charitable Foundation, and the Jet Foundation. He served as a board member of the UGA Foundation in New York City's Cultural Institutions Group, and the New York City Center. He also served as a treasurer to the Board of Trustees of Yeshiva University and a member of the Board of Directors of the Cy Sims School of Business. Madoff died in prison on April 14, 2021. He died of chronic kidney failure and was 82. Bernie Madoff got a good education and initially got a very good reputation. As he was running the biggest investment firm on Wall Street, many investors gave funds to him. His high returns were not due to his investments in stocks, which he claimed, but these returns always relied upon new investors, which Madoff was always getting due to his good reputation. If he had not confessed to his sons about his operations, his business would have flourished till now, and he would have been enjoying his lavish life running one of the world's largest hedge funds. Thank you for watching. Don't forget to subscribe to our channel to watch more videos like this.